On All About Stocks this week, volatility in the markets as the benchmark indices end down 2%. We'll tell you what your investment strategy should be. The defense sector is in focus as the DIPP proposes 100% FDI in the sector. Is there a stock in that space you should be buying? And our investment advisor G. Chokalingam has made a profit of nearly 40% on his portfolio, outperforming the Nifty by 10%. We're going to tell you how he did it. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, over the next half hour, we'll first explain to you what happened in our stock markets this week and why we saw that correction. And then we'll tell you what stocks you should be buying in a market like this and how you can use these stocks to get rich over the long term. Remember, my email ID is at the bottom of your screen. Send in any question you might have about your stocks. But first, let me bring in my colleague Ajay to give us an update on all of the action on the large street this week. Also, Ajay, tell us why the defense sector is in focus.
Well, Faye, market was in a bit of a corrective phase or consolidative phase this particular week. The benchmark indices have given ground of about 2% this particular week. Even broader markets were not spared. The benchmark over there were down about 1 to 1.5%. Financials were sluggish, and so were some of the PSUs and other policy-related stocks which ran up much ahead of any major policy reform actually being announced. We also saw some selling coming in from the FII side. In fact, most days this particular week we have seen there have been a sell figure from the FII side, and DIs have not been buying a whole lot. That was one of the reasons. Global Qs, nothing great to write about, and hence market was in a very narrow range at 7,500 or thereabout. Nifty continued to witness fresh shorting and heavy selling. Did find some support around the 7,200 mark at the lower level. Market analysts believe that going forward, till some concrete reforms are taken up or announced, market would keep moving in a very narrow range, though there would be specific areas of activity going forward. But specific policy announcements and also the upcoming RBI policy on June 3rd is something which market would like to take more direction from before really charting a new territory going forward, because the Q4 numbers are more or less over. There were not any nasty surprises this quarter on the downside, but most of the numbers were in line with estimates. So this particular issue out of the window now. These are the policy reforms and the policy from the RBI side is what the market is really looking forward to redirection from. Well, one area of stocks which were particularly active this particular week was possible defense beneficiaries, along with the BJP manifesto and different speeches by senior ministers in the BJP regime. Now there seemed to be a actual cabinet note being prepared for allowing 100% FDI in the defense sector into our country. Around 70 to 80 billion dollars is the kind of defense budget with which India foots, and hence that particular will be a big saving for the country. The BJP government wants to encourage high-end defense manufacturing back home in India with the help of foreign players, and hence is working on this policy. Market took heart from this one and started buying possible beneficiaries where joint ventures could happen. Larsen, BEL, BEML and Astra Microwaves from the small cap space was some of the stock which market was focusing on, could be the possible beneficiaries of FDI in defense into our country.
All right, Ajay, thank you for that update. Joining us today, G. Chokalingam, founder of Economics Research and Advisory Private Limited. Choka, thank you so much for joining us. I'm going to first pull up the Sensex over the last 1 week. Volatile would be a fair way to describe it. It's been up and down a fair amount. This is the sort of market that, a retail investor will have trouble reading. Is it just profit booking at this point? Or is that larger bull market that everybody said is here and it's going to last for the next 5 years? Are we already seeing a few question marks in that bull market?
I certainly do not have any doubt on the bull market. The market has run up very fast. And another thing is that in many stocks which participate in the rally, when you see their results, it is disappointing, whether it is GVK or GMR or Lanco. So that also partly explains the profit booking or correction in such a space. But also we had seen FIs taking out little money out of the market in the end week. But however, the bull market is intact because, a lot of people have already spoken on it. Apart from political stability, I firmly believe that, there is going to be a structural bull run because there is going to be huge inflow of FDI, FII money. And there will be a lot of unpopular names which will become popular. That's what happened in the previous bull run, whether you take a 2000 bull run in IT space, because even Wipro was an unpopular name in late 90s. It would be surprising to know. Similarly, even 2008 bull run, you had a Manappuram Finance, Phoenix Mill, creating huge wealth. So I see that kind of opportunity for the market next 1 to 3 years.
So this is a great market then to cherry pick stocks and to make money, is what you're saying?
Certainly, because market is ahead of fundamentals. It's above 5-year average in terms of valuation. So for index stocks or for index, I don't see more than 5 to 10% upside, but I see huge upside for individual stocks.
We heard Finance and Defence Minister Arun Jaitley tell us that the government is considering increasing the FDI in the defence sector up to 100%. Now, Ajay gives us a list of stocks that a lot of the street believes will benefit from this. Do you see value in any of these stocks? Power Defence, BHEL, L&T, Bharat Electronics, BEML. Are there any of these stocks that you think we should be adding to this portfolio right now?
See, I would suggest only BEL and to some extent L&T, but again, both in the long term. See, it is going to take anywhere from 1 to 3 years for any company to set up, even if they get successfully FDI through joint venture or directly in the company. There is a gestation period. It might take 1 to 3 years for materializing. And secondly, the defense sector is not like, shipping industry or the software industry. It's highly, extremely diversified. So you have a host of companies and you can't predict easily where it is going to come in. And third, if you see, India's fiscal conditions are very tight. It's not that, if it is opened up, Indian government is in a position to throw a lot of money to buy equipment. We are struggling to meet the capital expenditures. And also, if you see the top 6 players in the world, you have US, UK, China. China is the second largest player. So I don't think we can export to China on political ground. So it is too early to jump on the street and grab the stock overnight, where things are going to happen only after 2 to 3 years.
Okay, I want to ask you to pick a couple of let's call them Modi stocks for the time being, because we're talking right now to investors who have at least a 5-year horizon, 3, 4, 5-year horizon. We're looking at a government who's going to now see a full 5-year term with a majority, with the ability to make its own decisions at this point. Which sector and which stock, if I were to ask you to pick 2 from the large caps, cherry picking, the ones that you think are in the best position to benefit from what you just talked about, which ones do you think those are?
I mean, if you permit me, I would say that, it's very difficult to find Modi stock, but it is a Modi's market.
Okay.
Whether we like it or not, we have to accept it.
Right.
As I said, it's going to drive the whole economy and markets. So if you are bullish on revival of whole economy and market, then again, obviously, you have to go for beta stocks or the sector which are going to get a solid boost. That will be again from the banking sector. Because last 7 to 8 years, if you see, except the post-Lehman crisis, the banking sector always outperformed the index. So this time also they would do that. And if you ask me, then I would pick up, stock like maybe Yes Bank or Axis Bank.
Where do you stand as far as real estate is concerned? Do you still believe it's a sector that retail investors should stay away from because it has a way to go?
Certainly. To a large extent, they have to stay away because, as I said, the perception is playing, major damage to the retail investors. They should be aware of it. Nothing can be changed in 3 to 6 months. Even Mr. Modi cannot change the economic structure in 6 months' time. So it will take time. And already the prices in the real estate sector are ahead of the fundamentals. Affordability in the issue, industrial sector has been stagnating. So it is going to take a lot more time. So they have to be very, very choosy within the real estate. They have to choose good management and companies with a strong balance sheet.
Name a couple with good management and strong balance sheet.
I mean, maybe a company like Oberoi Realty, in the short term they don't perform well, but in the long term I am very confident that they should do extremely well.
The other stock we must talk about this week is Infosys. A lot of worried investors have written in, Venkat Ramanan being one of them. He has 300 shares of Infosys, which he bought at 29.85. Now, he wants to know if he should hold on to that stock. We saw another big exit coming in from Infosys. And of course, reports of exodus of senior executives in the coming weeks as well. Mr. Murthy has come out, as always, and spoken to the press and said that everything is okay, there's nothing to worry about. But obviously, investors will worry. What is your message right now to investors holding Infosys?
See, it's an institution. I mean, definitely individuals matter. But I don't think once a company has become an institution, the individuals are going to bring in a crisis to the company. So, and it's valued at 14 PE. And unfortunately, Infosys has become like an infra stock. For the news, it swings 20% up, 30% down in a day or in a week's time. But the investor should stay invested, and I am very confident that it will do well in the future.
All right, so hold on to Infosys. Now, this is why we should take the advice seriously. I'm going to take a look at Choka's own portfolio, an overall gain of nearly 40%. The Nifty over that same period, so that's 8th of August when we started this portfolio, is up about 30%. So, Choka, you've beaten the Nifty by 10%. Congratulations. I'm going to give our viewers a list of the stocks that you've picked first. There's ITC, Hindustan Zinc, RIL, Bosch, Oracle, Heritage Foods, Clarion Chemicals, City Union Bank, Infosys, Karur Vysya Bank, Tata Coffee, Bama Lorry, Moil, and Tilak Nagar Industries is also JK Tires. I understand you want to make a couple of changes right now. Do you think it makes sense at this point to maybe bring down the number of stocks in this portfolio?
Yeah, I mean, I brought down to 13 from 15. But of course, as I said earlier also, having 15 stock reduces the overall risk in the portfolio. Since it is targeted towards retailers, I've kept 15. Now I reduced to 13 because 2 stocks I wanted to remove.
Right. So take us through what changes you'd like to make right now.
Basically, I wanted to book profit in Bosch. It has run up substantially and replace it with Arcom.
Okay.
I firmly believe that Arcom can gain out of a tactical opportunity. I see huge scope for consolidation in the telecom space. Because the telecom, the mobile used to grow at 30-60% in the past. Now it is growing at 5%. The penetration has peaked out. So therefore, there could be an opportunity for consolidation. And secondly, I want to book loss in Oracle because the way I was expecting not happening. I'm not going right in Oracle. So I want to replace this with the Gensar. Because on 1 year forward earning, it's just quoting at a 5p and cash is almost 1/5 of the market cap, debt-free company. And in fact, I want to go aggressive on Gensar. So I want to put, even the money taken out from Heritage, which has run up very well. And fourth, I want to book minor loss in Tata Coffee and buy JK Tire. Somehow I love JK Tire because it has posted 63 rupee EPS for FY14. This is despite making 59 crore provision for exchange loss. And it's available at 3.5 PE. So I believe that this stock can, even from this level, can be a multi-bagger in the next 1 to 2 years.
Right, JK Tire has given you a return of over 100% since you bought it. I want to ask you very quickly about Clarion Chemicals and City Union Bank. Both of these stocks have run up about 50% on your portfolio. Do you want to hold on to them? Do you believe they'll give you more?
Certainly. I've been suggesting this stock for more than 12 years to my clients. So whatever time frame I take, particularly CUB, it has been making wealth. And I firmly believe that the banking licenses would be issued to many players. There would be a differentiated banking licenses. And the CUB would be one of the possible beneficiaries of this new license in terms of getting benefit out of consolidation.
All right, so this is one of our most successful portfolios on the show. It's up 40%. I'm going to give you a recap of the list of stocks as they stand after the changes that have just been made. There's ITC, Hindustan Zinc, RIL, Arcom, Clarion Chemicals, City Union Bank, Infosys, Karur Vysya Bank, Bama Lorry, Moil, Tilak Nagar Industries, JK Tire and Sensor Technologies. Of course, 10% of that portfolio is still in cash. It's time for us to take a quick break. When we come back, we'll talk about one of Choka's past recommendations. We'll take a look at his report card and he'll also give us a new recommendation that we can buy right now at these values for the long term. Don't go anywhere. Welcome back. You're watching All About Stocks and ET. Now, G. Chokalingam is still with us, helping us figure out our long-term strategy for our portfolios. Choka, we're going to look at one of the older recommendations that you gave us. You recommended Infosys on the 10th of Jan when it was trading at 432 with a target of 515 for a year. It's currently at about 440. It has remained largely flat for the last 6 months. Now, given the fact that the IT sector, the pack altogether, has taken a bit of a beating, what's your hope right now for Infosys? And those of our viewers who bought it on your recommendation, what do you suggest they do?
I would strongly suggest that hold it. In the last 3 months, it has corrected a lot to 480 level. So if you get any opportunity, try to accumulate more below 400. My confidence comes from the fact that HP, which is a $120 billion company, holds a majority stake in the company. There are 2 possibilities. One, HP can delist or HP can sell the company to some other, because globally their focus is more on the hardware. And even the recent acquisition has started doing well. And my first 2 possibilities in terms of delisting the company or selling of the company comes from the fact that I'm seeing a major structural change in the economy in terms of lot more FDI coming into the system because the rupee is down by 45% in the last 7 years. So I firmly believe that there will be a lot more delisting, particularly in the MNC space. So therefore, I would continue to reiterate add on declines.
All right. Do you want to maintain the same target on it, 515?
Certainly, yeah.
All right. So we're holding on to that stock and keeping the same target. Let's look at Choka's recommendation for this week. We're talking about Bombay Burma. That stock, for those of you who don't know about the company, it was one of the oldest listed companies in India. Now, basically, it's a concern of the Wadia Group, and its core business is tea, coffee, and other plantation products. It also has a biscuit and a dairy business, auto electricals and white good parts, healthcare, dental, other business. So it's quite a diversified business. Tell us why it makes your list.
Yeah. Before I recommend, I want to tell the retail investors that if they don't have passions, please don't buy the stock. I believe that there is an opportunity for making a multi-bagger return in the stock. for three reasons. One, it's into plantation, but it holds 51% stake in Britannia. Britannia is a subsidiary of Bombay Burma. On a consolidated basis, it is just trading around 3 PE. And consolidated profit has grown by about 52% in the FY14. Now, if you look at any bull market, the discount given for the holding company slightly gets reduced. Now, this company has 81% discount to the value of investment it holds in Britannia alone. So the market has valued only at the 19%. That is, if you take the enterprise value of Bombay Burma and subtract from Britannia's investment holding held by this company, the discount is 81%. So even if there is a 10% reduction in the discount, this stock can give you 50% return. And second, the company gives you a consolidated profit only on an annual basis. Now, there is a comparison with the Rane Holding. That is also an investment company. It doesn't have much business on its own. In fact, Bombay Burma has almost 4 to 5 times what Rane Holding has on standalone. Whereas they are projecting it as a consolidated company in the results analysis. Now that is commanding 10 PE. Now if I give 10 PE to Bombay Burma, it is worth about 300 rupees. Third, I firmly believe that in the long term, there is a possibility of Britannia being sold out. Because, I am not forecasting. As a student of economics, I am visualizing that. Because this group has got a lot of cash crunch in terms of Bombay dyeing, in putting a lot of money in the real estate, and also the group is into aviation business, which is sinking for everyone. So there is a remote possibility of some MNC acquiring even Britannia. If that happens, then the stock can multiply.
So when you say that investors who only have patience should pick up this stock, what sort of a time horizon are we talking about, and what kind of target do you have in mind for it?
See, 1 to 3 years. And if I have a conservative estimate, it should be minimum 300, anywhere around 200 to 250. But if management decides to focus on this company on a consolidated basis, then it can be 300. Third possibility, if they sell off Britannia, then unlock money, then this can move anywhere around 3 to 5 times.
All right, so this is the recommendation for this week, the Bombay Burma company. That's on your screen right now. That's the recommendation that Choka has brought to us. If you have any questions about something you heard, you can write to us. And when he comes back into the studio, we'll ask him to answer those questions for you. Let's take a few of the questions that came in during the week. Devanand has written in that he has 50 shares of Aisha Motors, which he bought at 4,400 rupees. He wants to know if he should hold on to that stock. Aisha ended the week at 66.75. Hold on to that stock?
I would sell. The story has played out. It's quoting at 20 PE, whereas Tata Motors is quoting at 7 PE. So I would sell and ship to Tata Motors.
All right. Next question. Binay has written in 250 shares of Aurobindo Pharma bought at 615 rupees. Should he hold on to that stock?
Same like Asia Motor. This stock has moved up 6 times in the last 2-3 years. So I would have more comfort in terms of IPCA, where the balance sheet also gives me a lot of comfort. So I would ship to IPCA Lab.
All right. Srinivasan has written in, he has the following shares in his portfolio. He sent us his entire list. Let's take a look at it. Let's do a bit of a rapid fire, take a look at his stocks. He has 100 shares of Tech Mahindra, which he bought at 1850. Tech Mahindra ended the week at 1923. Do you still believe that there's a lot more steam in Tech Mahindra?
Certainly. Because, IT would again come back. The rupee would stay around 60. The government and RBI, they don't have option, except supporting the dollar and keep a rupee at 60. So therefore, IT stocks would be again in favor, and Tech Mahindra will do very well.
All right. First Source Solution, he has 3,000 shares bought at 32 rupees. I mean, it's round about the same value right now. Should he hold on to that stock?
I would stick to the valuation discipline. So if you see the stock, it's quoting around 11 PE on FY14, whereas Gensar is quoting less than 7 PE. Whereas First Source is a leverage company. Gensar has got a cash and no debt. Net cash is almost 15% of the market cap. So I would suggest this shift.
All right. He also has Yes Bank, which he bought at 360. So he's making a really nice profit on that stock. And you said hold on to Yes Bank. But until what target should he hold on to Yes Bank?
The stock is fairly valued. But as I said, I am seeing the upgradation in the valuation multiple for entire market as well as for the banking sector. So therefore, you should hold on.
All right. Sun Pharma bought at 560 rupees. We saw net profit go up by about 57% this quarter on Sun Pharma. How much more can we expect from this stock?
I think it is something like HDFC Bank in the banking space. We have seen FDA alerts. So nothing is shattering this company. So I think we should go with this company.
All right. Another great stock at the bottom. He's picked up Motherson Sumi also at 266. What's your call on that stock? How much more can he expect from it?
It's a great company, but I would stick to again valuation discipline. It's quoting at 23 PE, so you should sell and buy JK Tyre, which is trading at 3.5. I'm very confident you will make more money in JK Tyre going forward.
All right, we're going to take a very quick break. When we come back, we'll talk about stocks like Tata Steel and Gujarat NRE Coke. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. G. Chokalingam is with us, helping us figure out a strategy for making money over the long term. A few questions that came in during the week. FB Patel wrote in, he has 100 shares of Tata Steel, which he bought at 400 rupees. He wants to know if he should buy more at this point. What's your call on Tata Steel?
Great company, no doubt, but I would shift to Hindustan Zinc because it trades at around 14 PE, whereas Hindustan Zinc trades around 8 PE. While Tata Steel has got a debt of around 66,000 crore, Hindustan Zinc is projected to have more than 30,000 crore cash. And also in India, in the last 3-4 years, the steel capacity has gone up by more than 50%. So this kind of concern is not there for zinc producer like Hindustan Zinc. So also tactically, Hindustan Zinc floating stock is very low. So tomorrow, if there is an opportunity for the government to divest, it can see huge upside in the valuation multiple. So therefore, I would advise this shift.
Well, Avnish has written in, he has 3,000 shares of Gujarat NRE Coke, which he bought at 11 rupees, and 300 shares of DLF, bought at 150 rupees. Should he hold on to both of these stocks? Now, we talked about real estate a little earlier on the show. For a stock like DLF, there's a lot of land banks involved here. Should he hold on to that stock?
It's highly leveraged, but still, pathetically beaten down in the last 5 years. I would suggest hold because recovery in economy can increase asset prices, and they hold one of the largest land banks. So I would suggest hold. But NRE Coke, I would suggest sell because it made a loss of 367 crore operating level on a turnover of 932 crore. So sell this company and buy JK Tyre.
All right, we have time for one last question. Padmavati has written in, she has 200 shares of Rallis India, but she bought at 196 and 50 paise. She wants to know, should she hold on to that stock? It's making a bit of a loss there. What should she do?
Rallis India already rallied and trading at 22 PE. And also there is a concern on monsoon, whether it's going to be a failure or successful. So therefore, I would suggest shift from Rallis and go for Gensar.
All right, go for it. That unfortunately brings us to the end of the show. Thank you so much for answering all of our questions. Now remember, if you have any questions for Choka in particular, write to us. Email ID is on your screen. You'll find a copy of this show on our Facebook page, and you can reach me on Twitter. Thanks so much for watching.